Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, of course, I've been thinking about the US election, which will have a very important impact on the markets. Trump has won, and we are yet to see exactly what package of measures and plans he's going to roll out. But one thing that we can be sure about is that Trump is all about keep building the infrastructure and maintain a very strong national network. But of course, we have seen that certain sectors, such as crypto, have been revived because of his victory. And we have seen as well that software has had a very, very good run since then. Since the election is up 10% only month to date, which is one of the best performing sectors. This has made me think about a stock that I see um, turning around, and the stock is Samsara, ticker IOT. The ticker is a bit of a hint in what they do. They are a provider of the Internet of Things. And in terms of what they do, it's actually quite broad. They have a cloud connected operation platform, right? Which ingests, aggregates, and enriches data from Internet of Things devices and embed capabilities for AI and analytics, API connections, data security, and privacy. So what does that translate into in the real world? So location and diagnostics with GPS tracking, video safety, regulatory compliance for workers for upcoming jobs, compliance log, and message on back office administration. Also, monitoring of unpowered and powered assets, generators, compressors, heavy construction equipment. So with these guys, they support the construction segment, uh, which has been doing quite okay, at least on the infrastructure side of things, right? So think about not necessarily construction of residential, but more of a bigger scale projects. And something I noticed as well is that the company, and this is a bit of the history behind it, uh, IPO'd as a high growth, but as you can see, since 2022, fell quite a bit because they were and still are unprofitable. We'll see a little bit later how the numbers add up. However, having bottomed at the end of 2022, the company has markedly turned around and seems to be doing pretty well. So, in other words, it seems to have proved itself to the market. And if we look at the valuation, yes, it's lower compared to where it started, but it has been getting better, right? So we just saw the stock price going up and the valuations has actually been coming down. In other words, the company or the price of the stock, it's catching up to the expectations that it had set for itself. So it's selling at the moment at 234 times next 12 month PE. And why is that? Well, they have achieved profitability milestones ahead of schedule, and they have demonstrated consistent execution and growth. Also, they launched new products such as AirTags for all the devices they track, and built credibility with large enterprise wins. They also have been if we look again back at this chart, more resilient than many other tech companies out there. So let's look at the numbers. We can see, and this is something I find quite impressive, that the company has gone from revenues of 120 million in 2020 to more than a billion in the last 12 months, which is very impressive. The gross profit has increased in line with that, not only on a nominal term, but also on a percentage basis. And yes, EBITDA is still negative, and so is the net income. But again, this is a high growth story, and the management are communicating to the shareholders that they see that growth story rolling over and continuing. EPS, however, has improved and is set to improve over the future. And they have also massively improved their debt position. Now, some recent catalysts that we experienced in Q2, they reported 30% growth and raised full year guidance. They also announced the new product success, which is their asset tags, and they brought some high profile board additions. They also recorded record customer additions. So that is the reason why we saw this uptick here, right? So the company went from 27 all the way to current levels, so nearly doubling in that space of time. So that's definitely very, very good performance. And now we see more catalysts as well down the line. One of them, and it's the reason why I started looking at this from a software sector uh, being rewarded by the market, is new AI product announcements expected. So they're introducing AI to make their products better, right? And aid with the continued international expansion, which is doing pretty good in Mexico and Europe. And those are markets that nearly everyone else is struggling to grow. But these guys not only have managed to do so successfully, they also have a very unpenetrated total addressable market out there, which is estimated at about 40% of global GDP. They also have a growing public sector momentum that at the moment is perceived as a risk in many different areas because with the new Trump administration, there is an increasing fear that many programs, initiatives, public spending may be cut. And yes, that could be a risk. However, let's not forget who is leading this initiative at Trump's cabinet. Elon Musk is driving that. And when you look at a company like this and the value that they bring, they are very much modernizing all the processes that go with managing heavy equipment and all the machinery and digitizing that. So to me, I would think that it's something that rather than being disregarded as a cost, could be seen positively by the government in terms of the institutions that hire Samsara services. And then, of course, we have to bear in mind the accelerating large customer growth. It's something that the company has been more and more successful at, improving margins and growth, and the ROI proposition, where the company has proved to customers and 8x return on the money. Now, the stock looks well positioned for continued strength because management is executing well. There are multiple growth drivers that are working. Profitability is also improving. There is a large TAM out there, and the innovation, not only because of the AI theme, but also the new products that they're expected to bring into market, is accelerating. And that shows in the operational KPIs they have brought into report. So between Q2 2024 and Q2 2025, we have seen total data points go from 6 trillion to 10 trillion. API calls from 55 billion to 85 billion. Miles tracked 44 billion to 70 billion. Partner integrations from 240 to more than 270. And the international mix as well has gone from 14 to 16. So that's all pretty positive. And last but not least, we have to bear in mind that this is a relatively young company, yet it has achieved a 20 billion market cap. I do feel that there is plenty of runway ahead for them to capture more and larger clients, and that's one of the things that I would expect to see in their next earnings report, which will be taking place in December the 5th. So onto the structure. I'll be buying the 55 calls in January with a view of a price target somewhere around 62 to 65. Volatility is decent. It allows for that to happen. Now we could be doing that as a straight long call, as the earnings call is only 3 weeks away from now. But if we wanted to buy some time in terms of raising credits, we could sell, for example, the 29th November. But in principle, my idea would be to buy the January's long call and then transition to a vertical if the earnings are positive. Hope you enjoyed the video. See you soon.